Now let's go over to my colleague Pallavi on the GDP data that's just come in, viewers, along with Radhika Rao, the Executive Director and Senior Economist at DBS Bank.
Right. Thanks a lot for that. GDP figures have just come in. India's GDP growth has come in at 5.4%. That's for Q2. And that's compared to 6.7% that we had seen in Q1. Now, GVA has come in at 5.6%, and that's compared to 6.8% that we had seen in Q1. This is the lowest we have seen in 7 quarters. We were anyway anticipating some sort of easing in GDP growth. The Bloomberg poll of economists had pegged GDP growth to come in at about 6.5%, and this is actually considerably lower than that as well. The RBI's projection for Q2 was interestingly at 7.2%, so big miss on that front as well. What this does mean is possible downside risks to the full year forecast. The RBI had pegged GDP growth for the full year at 7%. We're possibly looking at a cut on that forecast when the RBI MPC meets very shortly. But for more details and her quick views on what she's making of these figures, I'm joined by Radhika Rao. Radhika, great having you back. Thank you so much.
Hi, Pallavi. Happy to be here.
Yeah, so, what are you making? What are your first thoughts of today's figures? We were anticipating some sort of easing in GDP growth momentum, but this is a surprise on the downside.
Certainly, I think it is quite a considerable miss. I think the consensus was at about 6.5%. And I think there were some who were expecting perhaps even weaker. We were at about 6.5%. So this is a percentage miss. Of course, we'll have to see the details. If there are any revisions in the past data, which kind of has brought this number down so much. I think trend-wise, this was expected. After the election impact in April, June, it was expected that the next quarter would be better because the election, the impact would have gone. But then you had the interplay of idiosyncratic factors, things like, unseasonal rainfall. You also had lagged impact of what there was a delayed start after the election was over. And then there were also some macroprudential measures that were undertaken that took effect. That impacted credit growth as well, for example. So certainly a lot of things have come together in the July to September quarter. But at the headline level, this is a percentage miss. So I do think that there's going to be a risk of a downward revision for the full year growth numbers.
Right. All right. Government capex was clearly sort of one aspect, one of the drivers of growth we had seen post the pandemic. We had seen government capex almost near absent in Q1, and that did weigh down on growth in Q1. In Q2 as well, clearly we've seen very little support, both from the central and more importantly from state governments in terms of capex. What's the expectation, especially looking at the full year target for capex? And that's still fairly robust. Are we going to still see some sort of uptick there going forward that could possibly support the economy? And I also do want to understand, you think that will be enough to sort of make up for, the figure that we're seeing this time around? For the full year forecast, do you still think there are chances that we might see some upside in Q3 and Q4?
Certainly, we are counting on an improvement in the second half of the year, second half of the fiscal year. So coming back to your question on the capex, certainly if you see, the trend in the first 2 quarters, and then you have this budgeted target of about 11.1 lakh crores for the whole year, the government spending, the center's government spending reached to really go up by 52% in the second half to fulfill that full year target, which is quite a uphill task. And the second factor being that there will be catch up for sure. I think you can already see even in the July to September quarter. In fact, the September quarter numbers itself were quite encouraging. And the thing about capex is that while the government does its bit, there are positive multipliers to the private sector, to the construction sector as well, which again employs a lot more people. So a jump start in capex helps a lot more sectors, in lots more sectors in terms of growth as well as income as well. So we do anticipate, in fact, in the second half of the year, it will pick up. I think there is also an acknowledgement officially that the pace is moderating, and that's why I think you had heard a couple of voices also calling for rates to be eased. Also, that the quarterly used to have these ceilings on how much expenditure should be undertaken. Those have kind of been loosened to make sure that a slow first half can be followed by a faster second half. So this is on the center front. Of course, the states are also expected, they also did not spend too much in the first half, but we expect them also to be in lockstep with the central government to step up spending. The full year, I mean, there might be a small miss in the budgeted target. I mean, at about 11 lakh crores, I would think that 9.5 lakh crore might be reached. But even to get to that number, I think that's going to be very positive for the economy. Like I said earlier, it's just not just one component. You see positive effects on the other components as well. So we are certainly counting on capex and a couple of other segments as well expected to do better in the second half of the year. But that said, I think in terms of the trend, it will be hard to get to the 7% mark. Our growth forecast for the full year was about 6.7%. Where we had anticipated a slow first half and a better second half. Given that we have now got a July-September quarter, which is sub 6%, I think there's likely to be a full year growth forecast of, we'll have to reassess that number as well. So there are a couple of pockets, again, like I mentioned before, where we think there could be some catch up in the second half of the fiscal year.
All right, let's also have a quick look at some of the sector-wise trends. In terms of agriculture, we've seen growth come in at 3.5% now. This is a tad bit better than the 2% growth we had seen in Q1. That's also fairly in line with expectations given the Kharif production estimates. Mining and quarrying has come in. It's actually seen a contraction of 0.1%, maybe partly also because of seasonality, because of the southwest monsoons we had seen during that quarter. The secondary sector has grown by 3.9%, and that's compared to 8.4% growth that we had seen in Q1. Manufacturing has grown by 2.2% in Q2. That's compared to 7% we had seen in Q1. Electricity and other utilities growing by 3.3% compared to a double-digit growth of 10.4% we saw in Q1. Construction as well saw slower growth, coming in at 7.7% compared to 10.5% we saw in Q1.